Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena. Well, let's take stock of how the markets shaped up. Well, it was a day of decline yet again coming in for the markets. In fact, Nifty declined for the fourth consecutive session. It broke below the psychological levels of 23,500, then below 23,400, and we ended the day somewhere around 23,000, below 23,380 levels. That's where the Nifty ended the day. Sensex also was down almost 500 points, and then of course there was no really a real recovery coming in. 548 points decline coming in on Sensex as well. We also saw the India VIX shoot up today. India VIX was up 6%, marking a high day of volatility there. 5.5% is what it closed at. We also saw Nifty Bank declining, slipping away in trade today. Following suit with the benchmark indices that ended with cuts of 177 points. Broader markets were under deeper pressure. In fact, Nifty mid cap ended 2.1% lower. Nifty small cap was also down 2%. In fact, deeper cuts coming in for the broader markets. The selling intensified towards the second half of the day for the broader markets. Also, a couple of the sectors were also, all of them were trading in the red, barring Nifty FMCG, which was showing a bit of a resilience, but that also turned flat at the end of the day, giving up all those gains. And the Nifty FMCG also closed in the red with cuts of 0.4%. The metal pack was seeing a sharp decline coming in on the back of the threat from Trump tariffs. So Nifty metal was dealing under pressure on the back of threat from Trump tariffs. And also we had Nifty pharma that was also reeling under pressure because Trump has also threatened to impose import duties on pharma products as well. And Indian pharma companies have a lot of exposure to the US market. On the back of that, there was jitter in the pharma pack as well. So metals and pharma also down and out in trade. A couple of individual stock movers were Viatech, Vabag, Delivery, Zaggle. These were all the earnings candidate that posted their earnings. A couple of other order wins coming in for Ircon, RVNL, BEL, BHEL. These all counters were buzzing on the back of order wins coming in. So that's how largely the market shaped up. A couple of other things. There's insurance-less cars may be penalized according to sources. We'll get you more details on that. We also have no petrol, diesel, public vehicles in Maharashtra by 2030. That's the question that we are also tracking. And Asia's biggest aerospace show has kicked off. We will get you more details on that throughout the show. And of course, we have PM Modi is likely to discuss sourcing US oils. That's the word coming in from H.S. Puri, the oil and gas minister. These are the top headlines of the day. But let's get Ruchit Jain now, who's the Vice President of Equity Technical Research, Wealth Management, Motilal Oswal Financial Services, joining us on the day's trade. Hi, Ruchit. Thank you so much for joining us. Ruchit, fourth straight day of declines coming in on the Nifty. It broke below its psychological levels of 23,500 and it's below 23,400 as well. Is this a downward reversal? What are the levels that you're working with?
Yeah, hi, very good afternoon. Well, we believe that the markets would see some short-term consolidation where we would trade within a range of 23,200 to 300 being the support, and on the higher side, 23,800 to 900 being the resistance. If you look at some of the factors, then primarily this recent correction has been mainly, we believe that one of the reason was FIS selling, where in the cash segment they've continued to sell, but in the index future segment, the long-short ratio has improved marginally from 10% to 16 odd percent now. Secondly, I think USD INR was another reason where we have seen a sharp depreciation, and hence our markets have also seen a correction due to that. But in today's trading session, the INR has cooled off from its high, so which again I think is a bit positive. But we think that our markets will not see any significant price-wise down move from here on, but rather more of a consolidation phase or a time-wise correction could be seen, where 23,300 to 23,200 would be seen as a support zone. So if we get some more decline towards the range, I think the risk reward is favorable to go long over there. And on the high side, 23,800 would be seen as a hurdle.
All right, so those are the levels that we are working with, Ruchit. But do tell us about where do you see resilience also in this market? What are your top picks? Any buy calls in this market volatility?
So there are a couple of buy calls that we have recommended to our clients too, but primarily one theme that we are working on is we are looking only for those stocks which are showing a relative outperformance in the corrective markets. So it means that when the market is correcting, still if there are some stocks which are not showing any price-wise corrective phase, then we are only looking for buying opportunities opportunities in such names. Couple of names. First is a Kotak Bank, where I can clearly see a relative outperformance. The stock has seen a long consolidation breakout of about last 4 years of sideways move. And now the high top, high bottom structure can clearly be seen on the daily charts. And even you can see that now even when the Bank Nifty index is falling, we are not relatively witnessing any weakness in Kotak Bank. So there's a good relative strength seen in Kotak Bank. Short-term traders can buy with stop loss below 1920 for potential targets around 2050. And within the healthcare space, Narayana Hrudayalaya is looking positive, where again even the stock has seen a good relative outperformance in recent corrective phase of the markets. So it's even verge of a breakout from its recent consolidation. So Narayana Hrudayalaya can be bought with stop loss below 1340 for potential targets around 1480.
Those are the picks by Rohit Narayan Hrudayalaya and Kotak Mahindra Bank with target price of 2050 for Kotak and 1480 rupees for Narayana. Well, on that note, Richard, thank you so much for taking the time out and joining us today. We will let you go on that note. But let's shift focus to an interesting opinion then. Word from the wise Kotak AMC's Nilesh Shah believes that it is time to invest in quality over momentum. However, foresees volatility to continue over the medium term. But where should you park your funds in this market? Let's hear out his take.
Maintain your asset allocation. Don't invest looking at past performance. This is time to invest in quality over momentum. Reasonable valuation over expensive valuation, as price is what you pay and value is what you get. And stay away from low floating stock counters, where we believe froth is still there despite hefty correction. From a sectoral point of view, mid-cap IT companies leveraging AI to deliver cheaper, better and faster solutions to their customer. Private banks and NBFCs which are not overexposed to unsecured lending. On a portfolio basis, pharmaceutical sector which does get some benefits of a rupee depreciation. And telecom, where there is hope of some price revision flowing into bottom line. These are some of the stocks which provide good opportunity.
And well, that's the word from the wise coming in from Nilesh and where he sees value. But moving on, ahead of Prime Minister Narendra Modi's visit to the US, Petroleum Minister Hardeep Singh Puri addressed the topic of sourcing oil from the US. He believes that discussions around this are likely to take place between Trump and Modi. Let's go across and listen into what he had to say about this.
I'd be surprised if sourcing of energy from the US does not figure in the talks. I'd be surprised. I mean, it's something in the natural, discussion. I am very fond of saying, when I was Joint Secretary on the Americas desk, if somebody had told me we will buy even $1 billion of energy from there, I would have maybe been surprised. They're buying $20 billion worth. And with President Trump saying that he wants to see global prices come down, with President Trump saying that he wants more and more energy to come onto the market, I mean, for countries like India, that's a very positive development.
All right, that's Hardeep Singh Puri weighing in on Modi and Trump's dialogue. But moving on to how the derivatives diary looks like, let's talk about February expiry, which is on the 13th of February, which is this Thursday. For both Nifty and Bank Nifty, I can see a short build-up, which means that there is a bearish trend, bearish trend playing out here. There is a short build-up happening. If you look at the active calls, the first active call is at 23,400 levels. The second call writing is at 23,500, which means that the resistance level becomes 23,500 for the Nifty. Let's look at the active put calls then. 23,300 is the put buying, that's where the put buying is happening, and the second level to watch out for is 23,200 is where the put buying is happening. So this is the derivatives diary for the 13th of February expiry, which is this Thursday. But let's move on then. India's defense might is on display as Bengaluru kicks off Asia's biggest aerospace extravaganza. The 5-day spectacle promises to be a thrilling showcase of the latest advancements in aerospace technology, and for the first time in history, the Aero India 2025 will witness the participation of the two of the world's most advanced 5th-generation fighter aircrafts, the Russian Sukhoi 57 Su-57 and the US F-35. Times Network's Deepak Bopana has more updates on that.
Su-57, which is of course making its debut at Aero India 2025. The fifth generation aircraft, of course, from Russia is a one of its kind aircraft. It's a multi-role aircraft, stealth aircraft, and something that India, of course, has been on the lookout for. Right next to it, of course, is the Sukhoi 30. This is something that India has had for several years now, but what it's really looking out for is an aircraft of the capabilities of the Su-57. What's even more unique is the fact that this time around, there is also the F-35. F-35s of the US, of course, made its debut in 2023. This time the Russians bringing their stealth aircraft to the fore as well. Now, what's very important and why I'm emphasizing on the fifth generation and stealth aircraft is the fact that China has, of course, its own fifth generation aircraft parked at air bases very close to India, and India, of course, has been looking out at an opportunity to get hold of their own fifth generation aircraft. So while on one hand the defense minister has been emphasizing on the importance of India manufacturing its own very soon, but until then, will they really go for the F-35 or the Sukhoi 57? That remains to be seen. Apart from all the business deals that's at play for the people visiting Aero India 2025, they will, of course, bear witness for the very first time the Sukhoi 57 taking to the skies.
All right, moving on from there, let's talk about all the stocks that were in focus today and why they were buzzing in trade. For that, my colleague Ravinder is standing by. Ravinder, tell us what are the stocks that were buzzing away in trade?
Well, Engineers India is in focus, where company has announced its Q3 result and the revenue saw a decline of 12% year-on-year basis, and PAT increased from 63 crore to 109 crore year-on-year basis, and EBITDA margin saw a uptick of more than 700 basis point year-on-year basis. Moving to next, Borosil is also in focus, where company's Q3 revenue was up by 11% year-on-year basis, and net profit saw a decline of almost 5% from 37 crore to 35 crore, and EBITDA margin saw a decline of more than 300 basis point year-on-year basis. Moving to next, Shipping Corporation of India is also in focus on back of Q3 result, where the company revenue saw a decline of almost 2% year-on-year basis from 1341 crore to 1316 crore, and net profit saw a decline of almost 44% year-on-year basis. EBITDA margin saw a decline of almost 400 basis point year-on-year basis. Moving to next, on back of brokerage note, Cummins India is also in focus, where IIFL Capital has maintained the buy rating with target price of rupees 3598. They say that any new mandate catering to the North American market can be a big re-trigger for the company, and they expect a 17% CAGR growth over FY 25 to 27. And lastly, MTNL is in focus, where government will honor the sovereign guarantee for MTNL, and as per media report, cabinet likely to approve rupees 6,000 crore package.
All right, with that, it's curtains down in this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.